Hey guys, it's Rudy coming at you live from Lake Worth in Florida. This is sort of part two of my catch up. I need to address some of the comments and answer, or try to at least answer some of the questions that you guys have raised on the channel. And what I'm going to do now is kind of dip my toes a little bit into the pharmaceutical industry, or as some people call it nowadays, the pharmaceutical industrial complex, the way in which pharma pretty much controls the narrative as it relates to certain things that go on around us. But at the risk of sounding somewhat political, that's not my intent. What I want to do is I actually want to address a question that was asked by a new subscriber. So welcome to Joe Ramirez. He says, I'm new to the channel. I like your work. Well, I don't know if I can always give you the information that you require or that you might need in order to make sure that your investments are safe and sound and provide you a good return on investment. But anyway, Joe is asking me to perhaps compare AbbVie, the pharmaceutical company or pharmaceutical giant, to Gilead. So, this is obviously not a topic that I dip my toes into frequently. I actually, ironically, started my professional working career working for one of the super majors in the pharmaceutical industry. My first real employer, in other words, my first real job. I'm not talking about being a cashier at the supermarket. I'm talking about actually sort of starting out my career was with a company you might be familiar with, also commonly known as J&J, or in my case, Johnson & Johnson. But anyway, Joe said, can you compare AbbVie and Gilead Sciences and maybe see how they stack up one against the other? Now, what I did was, obviously, I'm out of date because I've been traveling and I've been on the road, but I have been putting together some presentations. So this is presentation number 2. And this screenshot, as you can see, it was taken on July 9th. So it's not too far out of date. I mean, today is July the 23rd. So just a couple of weeks ago, AbbVie for the past 5 years, that's the period I'm showing you here on this particular snapshot. So 2 weeks doesn't make any difference at all. AbbVie has generated a return on investment of 145%, whereas Gilead Sciences was only up 4% over the past 5 years. The blue line, the wonderful looking blue line over here on the chart, is AbbVie, and the horrible looking or ugly looking red line over there at the bottom is Gilead Sciences. So what is wrong with Gilead Sciences? Well, first, let's take a look and see what it is that they do. So AbbVie, their top selling drug is called Humira. And I might be pronouncing some of these things wrong, but anyway, Humira generated 14.4 billion in revenue for 2023. Revenue dropped significantly in 2023 after generic versions of Humira entered the US market. Pharmaceutical manufacturers have a patent protection period of about 20 years before generic versions of anything that they have put through their R&D channel and put to market kind of expires. When those patents expires, of course, the generic manufacturers jump in, and so does the original equipment manufacturer or the original initiator of the drug as well. Nothing prevents them from also making a generic available at a lower price. AbbVie's second biggest revenue generator is Botox. That's one of the reasons why I look so incredibly youthful, right? So if you think I look 20 years old just because I'm very lucky, no, it's all because of Botox. Humira, by the way, is an immunosuppressive drug for treating arthritis, plaque, psoriasis, ankylosing spondylitis, Crohn's disease, and ulcerative colitis. So the first thing I want to do here is just make a point and say drugs work. So I'm not entirely anti-drugs. The problem with the pharmaceutical industrial complex, as we know it today, is that it's mainly profit-driven. And the problem with the medical sort of industry as a whole is that doctors very frequently ignore looking at the underlying causes for whatever your health condition might be, and prefer to just reach for the prescription pad and write a prescription because it's so much easier. And in addition to that, it's sort of instant, right? So if I ask you about your lifestyle and your diet and your stress and all that kind of stuff, if you have high blood pressure or high cholesterol or something like that, this is an extensive discussion. It might require you to adopt some life-changing habits and things like that, which might take weeks, months, sometimes even years to give you results. Whereas if I pull the prescription pad closer and write your prescription for a pill, we can fix your condition fix your condition, sort of like tomorrow or the next day or whatever the case might be. How about Gilead? So Gilead's top performing asset is a drug called Biktarvy. Biktarvy, I don't know. Bringing in $2.9 billion, a 10% increase year over year. And the second largest seller that they have is Veklury, which is more commonly known as remdesivir. This drug is pretty much one of the reasons why Gilead's in the tank and scraping the bottom of the barrel. Anything related to COVID, especially in the case of Gilead, remdesivir. Many people smarter than me say remdesivir was actually sort of a killer as opposed to a fixer in terms of treating people with COVID-19 who ended up in hospital. So I don't have enough expert knowledge on this, and certainly don't know enough about the drug or the effect of the drug or the efficacy of the drug in order to comment. But this was a problem for Gilead for sure. Biktarvy, the top one, is a fixed dose combination and antiretroviral medication for the treatment of HIV and AIDS. So these things are highly, highly questionable, except that even experts like Greta Thunberg tells us that the vaccine works great, and Gilead's almost their entire business is related to vaccines. Anyway, on a more serious note, well, let me have a sip of Gatorade just to keep myself healthy and fit. This is actually Gatorade. It's not beer today. I did go for a jog this morning, so I can put a bit of sugar back into my body. The technicals, if we look at the 20-day raw stochastic, the numbers are about the same, 42 and 55%. We know from past experience that if the raw stochastic tops 80%, so if it goes higher than 80, or if it dips below 20, if it dips below 20, it's an absolute buy, it's a steal. This is kind of in the middle, and if it's over 80, then it's overbought. So these look okay from a 20-day raw stochastic point of view if you're into the technicals. If we look at the key statistics on the company, it's kind of interesting. The market cap here, 294 billion, 84 billion, and the annual sales, 54 billion, 27 billion. So comparatively, if you look at the $27 billion in revenue, annual sales that Gilead is generating, the market cap is about 3 times that size, whereas in the case of ABBV, it's almost 6 times that size. The price to earnings ratios look reasonable, so from a raw stochastic point of view, from a sales to book point of view, or market cap point of view, from a price earnings point of view, they look okay, both of them right now. If I go into my brokerage account and pull up these two stocks, ABBV and Gilead. So I'm bookending them here because ABBV is on the left and Gilead's on the far right. The peer comparisons or depending on what they do or what it is that you're looking for, come up as Amgen, Vertex, and Regeneron. These companies are sort of the same as mostly ABBV rather than Gilead Sciences. I just threw Gilead Sciences in there because that's what Joe asked me to do. The annual dividend yield is quite interesting because it's not bad at all. ABBV about 4% almost, Amgen about 3%, and Gilead Sciences 4.5%. Many people, including myself, once upon a time had a long position in Gilead. I don't own any of these stocks. I had a long position in Gilead a long time ago, probably about 12, 14 years ago, and mainly for the dividend, which at that point in time was maybe about 6 or 7%. They're all profitable, as you expect pharmaceutical companies to be, with the exception perhaps of the vaccine manufacturer, which is hovering around zero at just 1.66% net profit margin positive. The others look okay. And these two pop out for me because it's sort of an outlier or an anomaly when you see net profit of around 40 or 30% is pretty good for Vertex and for Regeneron. The fundamentals, going back to AbbVie and Gilead, an interesting picture, right? So we have long-term debt to equity here. This is a percentage, 800 for the most recent quarter compared to 122. They carry a lot of debt. Of course, the question is not so much how much debt do they have, but what is their ability to pay the debt rather than how much debt they have. The return on equity for AbbVie looks okay, 55.9%. It's all right. In fact, arguably, it's pretty good. Gilead just sucks, 2.5%. So yeah, they're not the same. Return on investments, 5.6, 0.96. almost on every metric, I'd say AbbVie is better than Gilead, but also because of the type of products that they manufacture. Earnings per share, trailing 12 months, TTM, 3.36 compared to 0.36. Price to sales, I talked a little bit about that earlier when we looked at the market cap compared to the annual sales. Trailing 12 months, AbbVie, 5.4. Price to sales, Gilead 3. Price earnings growth, almost 8 compared to 35, right? So there are a couple of benchmarks that look okay for Gilead. Gross profit margin, 66% is not bad. 77% is even better. Net profit margin, 11, as I said, compared to 1, not a good picture for Gilead at all. Cash flow, this is a good picture for AbbVie, 8.29 on trailing 12 months, $8.29 compared to just $2.55. By the way, $2.55 is not bad, but $8.29 is exceptionally good. Really, really nice picture here for AbbVie. Current ratio, so this is what I talked about in terms of their ability to pay their debt, right? We want a current ratio and a quick ratio to be greater than 1. So we have on these little 4 boxes here, we only have Gilead with a current ratio of 1, and the others are below 1. What this means, just very quickly, the quick ratio is how much cash do you have in the bank compared to how many bills you have to pay over the next 30 days or so. That has to be greater than 1, otherwise you don't have enough cash to pay your immediate short-term liabilities. And the current ratio is your cash and cash equivalents compared to your current liabilities. They both should be above 1, otherwise you're flying too close to the sun. And Gilead is sort of there or thereabouts. I mean, there's not a lot of difference here between the two, but it needs to be 1 or greater. It shouldn't be below 1. I talked about the long-term debt to equity ratio, and we look at the long-term debt, 63 billion compared to 21 billion. Remember, Gilead's market cap is only 54 billion. So if their debt is 21 billion, you have to take that off their market cap to give you sort of an indication of how big the debt is compared to the actual asset worth or net valuation of the company. AbbVie, on the other hand, has long-term debt of 63 billion, but they have a market cap of, 250 to 300 billion. So very, very different there. This is TipRanks. So TipRanks says this is AbbVie's 12-month stock forecast. Basically, 12 of the analysts are saying you can buy it right now. 3 of them are saying hold. I'd say you can put this on your watch list. I would definitely say you can hold it. I'm not sure if you want to buy it right away. Maybe you want to buy it when it pulls back a little bit from $185 or thereabouts per share. Currently, AbbVie is a great performer, and it's one of those stocks, like some of my energy stocks, that you could just buy, tuck away in your long portfolio, collect the dividends sort of as a high interest yielding savings account, and you'd be okay. Moderate buy on Gilead, on the other hand. This is a split here between buys and holds. 13 say buy, 13 say hold. They say there's about a 15% upside from the current price. There's a I don't know who this analyst says it's going to be trading at $1, but that would be an anomaly. I think the sort of $78 price is probably realistic. So there or thereabouts. So yeah, that's my take on this. What do you do with it? I'd stay away from Gilead. I'd stay away from pretty much anything that's related to vaccines right now. I started off saying that my professional career started out with Johnson & Johnson as a pharmaceutical sales rep. As a young kid, if I had bought Johnson & Johnson then and still held it today, it probably would have been up about 1,000% or so. You can tuck that one away in your portfolio and keep it forever. AbbVie is sort of in the same league as a Johnson & Johnson. I wouldn't want companies like Moderna or Pfizer or Gilead in my portfolio at all. In fact, I wouldn't even place them on my watch list. And AbbVie, well, between the two, Joe, I'd say AbbVie is a winner. So that's my take on these pharmaceutical companies, and my take on an answer or an attempted answer to Joe's question. Thanks for watching. I'll be back with more soon. Take care. Bye-bye.